Today we're going to talk about actually two topics. The first thing I want to get into is the distance from the all-time high that the S&P is at right now. There have been some questions about, are we still in the correction that started in late January, and does it mean the bull market's over if it's been 4 months since we've made a new high? And Mike, you produced some data that I thought was really interesting about just how frequently, even in a great bull market, we actually close at new highs, and it's actually pretty rare.
So from 1982 to 2000, the S&P 500 closed at an all-time high only 10% of all days, which I thought was pretty low, lower than I would have guessed.
So 90% of the time during the 1982 to 2000 bull market, we were not closing at new highs.
Correct.
And that is arguably the longest bull market, or at least one of the best. It's 1,150%, not including dividends, during that whole stretch of time. Right. So think about how much of that time people must have spent saying, all right, maybe it's over, maybe it ended. Obviously, especially in a moment like 1987, the 1984 correction, you're very far away from record highs, and you don't really know until hindsight that you're still in that same bull market, and it has not ended just because you've spent a period of time at a distance from a new closing high.
So if investors were told at the end of December 2016 that 2017 would deliver a 22% gain, and then they would have to go sideways for the first 5 months of 2017, I think everybody would sign up for that.
Well, right. So that's the situation that we're in. No return whatsoever this year, but arguably 3 years, 4 years worth of returns packed into 2017. So it would actually not be completely abnormal to have two flat years after a year as good as 2017 was. And I think one of the things that bothers people is they get so accustomed to seeing the balance of their account grow. 13 straight months up for the S&P, is that right? Or 15 straight months? What was the number?
I think that just ended in April, but it was,
right.
It was a long time.
So then you don't get it, and then it's like, all right, is the best, have we seen the best? Is that over?
You could cross like 2,600 on the S&P on the way up, and it feels like euphoria, and then you cross 2,600 on the way down, and it feels like panic.
So I think people need to just say to themselves, even in an amazing bull market, a lot of what happens in streaks, and then you can go long periods of time with no progress whatsoever and just chop. But how do you know? If you're not sticking around for whatever the next leg is, you really have no way of knowing if you're going to miss the next 22% year.
But if you sign up for our newsletter, you'll have a pretty good idea.
Right, but barring finding the right newsletter. The other thing I just want to get into quickly, you had done something really interesting about compounding. I think the main point of what you were trying to say was that you can get a very, very respectable 30-year return just earning 6% and minding your own business, and not going out there and looking for something abnormal or hard to find. But people have trouble with the 30-year part more so maybe than the 6% part.
Yeah, an author, Rolf DeBelly, wrote The Art of Thinking Clearly, and he said that linear growth we understand, like 6 plus 6 plus 6 plus 6 plus 6, we get it. But 6 times 6 times 6 times 6, at some point it overwhelms what our brains can do. So if you got 6% a year for 30 years or 6% compound annual growth for 30 years, 25% of the terminal value comes in the last 4 years. So further emphasizing the point of not understanding compounding, if you were to fold a piece of paper in half 50 times, that would equal 60 million miles. Just
right.
A piece of paper.
Right.
Folded in half 50 times.
Those last few folds are like as tall as the moon.
Right, so that's from here to the sun.
Right. So $1, at 6% over 30 years, $1 turns into $5.74, which I think anyone would look back and say, hey, that's pretty great. I could basically do anything I want to do.